Financially, we'll be stronger than ever before. I think the markets are going to soar.
Inflation, the crypto markets, traditional markets, the state of America, and what big money is doing and why you need to pay attention. I'm WendyO. I talk everything crypto every single day. To get more, make sure you subscribe with all alerts set, smash a like, and drop me your thoughts after you've watched the entire video. Let's get into it. Wednesday, March 12th, it was announced that inflation has dropped to 2.8%. Inflation came in at 2.8%, which was lower than expected in February. But the thing about inflation is the public servants can increase or decrease it, and yes, even unelected bureaucrats. And once inflation is increased, the cost of goods and services go up, and you cannot modify those. So it really doesn't matter what inflation comes in at, because cost of goods and services, energy, food, shelter is still expensive. However, lower inflation, cutting rates, does make it more affordable to borrow money. And it's generally for like TradFi, because they're the ones that really borrow a lot of money. And stick around, because I'm going to talk about something that Larry Fink said and why it makes complete sense. As far as inflation goes, CPI rose 0.2% for the month, annual inflation at 2.8%. Core CPI, which excludes food and energy, rose 0.2%, and the annual increase 3.1% below forecast. And the stock market and crypto markets reacted positively. Bitcoin remains around like $80,000, I think $83,000, which is good because we didn't dump down to about $70,000. And altcoins are making some nice gains across the board. But shelter costs did drive CPI to increase. And again, energy, food, shelter are the most important parts for regular Americans, people like you and me. But the good thing is that anytime we get rate cuts, which future market analysts predict that we're going to get a lot of rate cuts or any type of modifications, it could be good for the stock market and the crypto markets. And that's exactly what we need to be paying attention to. Larry Fink earlier this week also said, and yes, Larry Fink from BlackRock, that investors should buy the dip. He's basically telling you exactly what he is doing and all his buddies are doing. And on this channel, we follow the money. We watch what these people are doing. We don't necessarily always react or follow exactly what they do, but we pay attention. And if Larry Fink is buying that dip, I want to buy that dip too, especially considering the current state of America. Because the US budget deficit just surged in February, passing $1 trillion for a new year-to-date record. And the people this is going to hurt the most is the middle class, people like you and I. But what we can take away is we do know that Larry Fink is buying, and people in a similar status as himself. And another interesting take, Matt, the CIO from Bitwise, said if Bitcoin does matter globally, it will be around a $10 to $50 trillion asset, essentially implying for a 5 to 25 time pump. And right now, Bitcoin's market cap is currently sitting a little bit over $1 trillion despite current market conditions. So let's round it up. We know that it is expected that we're going to get multiple rate cuts this year, and multiple rate cuts have impacted the stock market in a positive manner, as we saw earlier today. We know the United States of America wants to acquire more Bitcoin along with many other countries. Larry Fink is talking about buying that dip. And remember, BlackRock put out a research paper about Bitcoin and what a great asset it is, comparing it to gold, a hedge against inflation and geopolitical uncertainty. And then another big money guy from Bitwise says Bitcoin is going to 5 to 25 times. So the moral of the story is, hold on to your Bitcoin, acquire Bitcoin, do what you have to do to get ahead in the market as ethically as possible. Because that's exactly what these big guys are doing, despite the high levels of inflation, high cost of goods and services, and massive amount of debt in the USA. Thank you for watching. Bye-bye.